Hi everybody, I'm here with Mark McLaughlin, Bloomsbury Professionals Tax Consultant Editor. Hi there, Mark.
Hi Dave.
I wondered if we could talk for a couple of minutes about a recent case we reported in our online service, and this is to deal with private residence relief and an appeal case, Simpson against the Revenue.
Yeah, that's right. Just to recap on private residence relief, the legislation's been there for a while, but the legislation itself is fairly brief. But there are basic requirements to be satisfied. A property's got to be occupied as a residence. It's got to be a residence which turns on the quality of occupation, and it's got to be an only or main residence. So I think a lot of people tend to concentrate on how much private residence relief they're actually going to get, and they tend to overlook these basic requirements. Now, there's been a long line of cases on private residence relief, and a lot of recent ones have tended to focus on whether a property was actually occupied as a residence or not. And as I say, that turns on quality of occupation. And that's what Simpson was about, Simpson versus Revenue and Customs. In this case, the lady owned two flats, one that she'd owned between 2001 and 2015, so about 13 or 14 years. Now, within that period, she owned a second flat for a period of about 6 months, and that was the property that was subject to the case. She claimed private residence relief on both flats, and the Revenue picked up on the one that she held for 6 months and said that it wasn't actually a residence, therefore private residence relief wasn't due. So the case went before the tribunal, but what the Revenue basically said, that she never actually occupied it, that if she did occupy it, it wasn't a residence, and that if she occupied it and it was a residence, that it wasn't an only or main residence. And then there was a fourth argument which said that if she satisfied all those conditions, the relief still wasn't due because she bought and sold it as sort of a trading transaction. So it was a four-pronged attack by the Revenue. Yeah. But what the case really focused on was whether it was actually occupied as a residence or not. And in deciding against the taxpayer, the elements that the tribunal looked at were things like the utility bills. Did they suggest that it was occupied as a residence or not? They looked at the furniture, and what the tribunal found was that she moved some spare furniture over from her actual main residence to this flat that she held for 6 months. Council tax that had not been changed over. And it was really a combination of those factors. She also claimed that she'd moved into the flat and then she'd refurbished. And the tribunal said, well, why would you want to move into a small flat and have it refurbished at the same time when you had another residence that was perfectly fine? So, the facts didn't really work in her favour. And in the end, the tribunal decided that it wasn't a residence as such because of the quality of occupation. And unfortunately, there are a number of cases, there have been a number of other cases where the tribunal have reached a similar conclusion on residence. So it's just something that taxpayers wanting to claim private residence relief, just look at the basics, that it's occupied, that it is a residence, and it's an only or main residence. I think that's really the message from Simpson.
Yeah, interesting stuff. And that and many other cases on this area are covered in the Bloomsbury Professional Online service, and I think we have some useful commentary on this area as well, in-depth commentary in many places. A good place to start would be in our tax planning online product, where there's a whole chapter dedicated to this area with references to the core legislation. But yeah, thanks Mark, that was really useful.
Okay, no problem.